It's May 6th, 2019. As I say in the heading, remember this date. This market is going to feel choppy for the next few months. Then we're going to start a decline. I'm not saying dump everything now. I'm saying look at your holdings and understand that 3 years from now, we're going to have a lower market than we have now, and you're not going to escape this unless you're Warren Buffett. And maybe even Warren Buffett will escape it. Today was valuable because it kind of shook everybody up. The market came back. I don't know what the final score was, but we all know that May 19th, Monday, was a bad day in the morning, and then it got a little better. But this is, excuse me, let me get my things squared away. This is a valuable day because we know that this market is overvalued by the three common benchmarks. Earnings per share, it's above the historic average. The value to book value is above the average, historical average. And the value of the stock market as compared to the gross national economy, gross national product. These ratios are remarkably stable over long periods of time. And you're not going to avoid reality. You're not going to avoid this inexorable push that nature has to force its reality into your life. You're going to see disappointment unless you accept the reality that this market is overvalued. Period. We can't escape it forever. Obviously, one of the reasons is low interest rates. Well, let's look at into the future a little bit. Do we think that we're going to escape higher interest rates forever? No. I don't know what's going to be the trigger, but we all know that when inflation starts, the tendency of the central banks all over the world is to raise the rates. You got a bank that's down. You got a very low unemployment rate. They're not going to avoid this interest rate problem forever. Now, there are other markets that have overvalued too. Housing in certain sections of the country. Go to your real estate sources on the line and ask, put in the question, what in my city, whatever the city is, what houses have been reduced in price in the offering price? And you're going to see that list begin to expand. It's inevitable. We've had a great run. We came off a very low bottom. We had a very low recovery with Obama. Excuse me. And in a way, that kind of helped Trump because there was enough slack in the economy that he could, by pursuing a tax cut and less regulation, he could take advantage of that slack and make a nice recovery, which we have seen. But if you look forward politically, I don't see that anybody can think that this is going to continue. First, he's not going to be able to cut taxes anymore. I mean, he may have overstretched it, and I think even with some Republicans, they think he overdid it. he lost the midterms. I don't think that his chances of re-election are as good as some people think. Remember, this was a squeaker. In fact, he lost the popular vote, and the demographics are against him. Demographic changes. I like Trump. I like in many respects. He said things I wouldn't have said, but he believes in the market and the market solution in a way that Obama doesn't, in my opinion. But we can't escape reality forever. And remember, trends, I have seen it in my life, trends last longer, both on the upside and the downside, than rationality would predict. That is, when things start to go south, they go south longer than we would normally predict by looking at historical standards. Similarly, when they go up, they go up longer than they would rationally justified by the numbers. Could be rationally justified by the numbers. So remember this date. This is a valuable date. It's time to accept reality and start to lighten up on the stock market. Thank you much.